You're losing your money right now if you do not know. I know you've been hearing of me talking about inflation, or if not me, then you've ever heard of somebody else talking about inflation. And sometimes you usually find a very hard time to understand what is inflation. Let me just explain to you very fast. Here in Kenya right now, as we speak, the inflation is 7%. Right now, as you watch around November, October, whatever the time, okay? The point is, the inflation is 7%. What does it mean? If you take your 100,000 Kenyan shillings from January this year, and you did put that money in a bank, by the time we are getting the December, which is a month from today, then it means you have lost 7,000 from that amount of money that you did deposit there. And I know you are like, no, Joseph, I didn't lose my money. If I go back to my bank and key in my PIN, then I'll be able to see my 100,000 intact. No. You know what that means? It means the capacity of that money to purchase has actually been reduced by 7,000. So that's what it means by inflation. And guess what I'm going to do today? I'm going to show you what you can be able to do not to lose your money again from that specific place where you've invested your money. All right? Let's get into the business. The title of the video says how to beat inflation like a pro. And this is the secret that majority of the wealthy people don't share it out there. But hey, this is Good Joseph's channels. I always go out there, make sure that I gather the best information that can help you, and let's get into the business, okay? But don't forget, anyway, I'm sharing this information with you for free. I'm not charging you nothing. The only thing I want in return is to subscribe to this channel. There is a small button written subscribe down below there. It is black. Hit that magical button, like this video, and by doing that, you'll be notified by YouTube whenever I upload a new good video. Let's get into the business now. Okay, now there are two ways here. I said you're losing your money that you've actually deposited in a bank. So the only way you can actually get yourself out of that problem is two ways. Before I even explain my points here, let's first of all consider these 2 points that I've written down here. Okay, the point number one, the only way you can outshine the inflation is actually doing what? It's making more. What does it mean? If you can actually be able to make more than you're losing, and then at the end of the day, you're actually on the what? The positive trajectory. Okay? Because at the end of the day, there's no way you can twist this inflation. This is the role of the government to actually balance this inflation to a point where, they always say like, hey, an inflation of around 4% in Kenya, we considered it as safe. But when it goes all the way up to this particular point, then this one is quite outrageous. So the only way you can outshine this inflation is by actually doing what? Making more. What do I mean by making more? It's actually having other passive income, far from what you usually do as an active income that can actually facilitate more. That is one way you can actually go ahead and beat what? Inflation. Number two is to invest in place of what? In place of savings. What does that mean? You see, if you take your money and go and save, the traditionally way of approach of wealth is actually saving. A lot of people talk about save. Take your money, take it in a bank, fix it somewhere, and then you're told, hey, that's now the deal. That's the real deal of actually getting yourself rich or wealthy. That's not the case. What you're supposed to do in 2023 henceforth is to invest. And I've been sharing this information with you and telling you guys, guess what? 2023 we don't save money. Why? Because we can actually invest our money from the comfort of our chair. Okay, so the point is, consider investing in place of savings. Okay, I understand you cannot escape the point of saving. If you maybe want to invest in somewhere that is quite heavy in terms of the cash, then you have to save first or accumulate or store and then invest later. Okay, I know that one is more theoretical than it can actually be able to solve the problem. Let's now go to the more practical way of doing or approaching these two things, okay? With you thing, let's get into the point. Now, the point number one is actually investing in this area called the global investment. I know you've never heard of this thing, but there is something called global investments. What does it mean? Right now, I've given you an example of Kenya. Kenya has an inflation of 7%. If you go to America, right now is around 3 point something percent. If you go to Europe, some countries like UK, it's around 4 or 5, around there. So the point is, different countries usually have different rates of inflation. So it means if you concentrate your own investment in that given country that you are in, then you're subjected to this amount of inflation in terms of the percentage. Okay, but if you were to diversify, invest in different areas or invest in different countries, then you're gonna get yourself something at the end of the day. And are you like, Joseph, are you even making sense? How can I invest in outside Kenya if I live in Kenya? How can I exactly do that? You can do that. And that's why you find most of the world people usually convert their currencies into dollars, into euros, into Swiss franc, into Japanese yen, because you see, what happens is this. When I say the Kenyan inflation is 7%, it means this 7% is subjective, or is okay, or our Kenyan shilling is subjected to this percentage in terms of the inflation. So if you were to convert your money to dollars, then your dollar is subjected to this percentage in terms of the inflation. You see, when you have your dollar denominated account in a bank, then it means your local inflation, your local, sort of an economic torture or pressure or whatever you're gonna call it, it means that it's not affecting you. So then it means if you were to diversify, invest in dollar denominated accounts, euro denominated account, pound denominated accounts, and most of the banks in our country actually offers that. So just show up to your bank and ask whether they offer the opening of account of a dollar denominated, the euro denominated, the pound denominated, the Swiss, the Japanese, all those kind of things. Okay, now the point is this: that is one way of actually doing what? Investing globally. The other way you can actually go ahead and invest globally is to buy shares of those international companies. Do you know, even you are in Kenya, you can actually buy some shares in New York Stock Exchange? You can buy those shares. You can buy likes of the, Amazons, you can buy a Coca-Cola, you can buy those American-based companies, you can buy index funds in America, likes of the SP 500, you can buy the Dow, Nasdaq, and all those kind of things, okay? So you can actually go ahead and invest in those areas. And don't want to give a shout out to those companies or certain app that actually facilitates you to do exactly that, because they haven't paid me anyway. So the point is, you can research and you can find a way where you can be able to invest in a global country, other countries, so that at least you be better off. Now, the second point is actually investing in commodities. And I bet you've ever heard of me talking about this thing. And the commodities that I would like you to invest, number one is gold. Number two is silver. The other one is about oil. The other one is something like, I know those are not commodities, but anyway, whatever they are, wheat, these are quite strong things, that corn or maize, whatever you call it. This is, you see, wheat is one of the most consumed product on earth, not only in Kenya, on earth. Corn as well, commonly known as maize in Kenya. The oil as well, of course, this doesn't need any introduction. Of course, you know very well, gold does so, the silver does so, likes of the diamond and what have you. So those are actually the commodities that you can actually go ahead and buy. And by the way, I know you're like, okay, fine, Joseph, where can I get gold in Kenya to buy? There's some legit companies here in Kenya. They are stable. They sell gold, legit gold, all right, that you can actually buy. Some decide to keep it in their houses. Others, they can actually buy those commodities and keep it in a bank, whereby you'll be paying some sort of a service charge or something. It's like, by the way, are you aware, guys, that you can take your certificates and those, should I call them the prime documents, so personal documents, and keep it in a bank, just to avoid cases of maybe, a fire outbreak or something of sorts. You can keep it in a bank, and then you pay them to keep that thing from their registries, or whatever they call vault, or whatever they keep it. So the same case applies when you buy gold. You can actually keep in those areas, provided you just pay that accommodation fee out there. And perhaps you're asking yourself, okay, how much should I buy gold? Depends on the current market or rather the current price in the market. That's what you use to purchase those gold and keep them in, what we call the physical form. By the way, if you can just a little bit digress and explain to you why gold always remain to be one of the top metals that people usually buy. You see, back then, before we get the money, the money that we have right now is called fiat. Fiat does not have any sort of a backed value. So what happens is that before then, the money used to be called, a commodity-based money, meaning that back then you used to go to a bank with a certain gold. You keep it that gold there, and then they give you that leaflet or that paper that is written 1,000, whatever the kind of a money is. So at the end of the day, hey, if I take this money back to my bank, they'll give me a gold. Nowadays, we don't do that. They just give you money and they tell you, yes, that's 1,000 bob. Yeah, it's 1,000 bob. Yeah. How do you just, no, it's just you just go with it. It's 1,000 bob. So it's not backed anywhere. We call it fiat money. Anyway, that's not the point. Now, the other thing you can actually go ahead and invest is actually called diversification. Okay. By the way, do you know in any given country that different things actually attract different percentage of inflation? For example, you might realize that the oil in Kenya perhaps is actually having a way high inflation compared to something like stock of cooking oil, or maybe something like cooking flour, or maybe something like a sugar or something of sort. Different commodities usually are subjected to different inflation. This 7% is usually like sort of an average in terms of all the commodities. So you realize that, for example, in Kenya, I usually tell people there are two things that usually attract a very high inflation. Actually, let me just talk two things actually. One is about the tomatoes, depends on how you pronounce it, okay? And the other one is Irish potato. Those are things that usually have a very crazy sort of an inflation. What does it mean? At one season, you might realize the bucket of Irish potato is going for 250 Kenyan shillings. Within 2-3 months, the same bucket goes for 1,200. So you can realize that within that duration of like 2 or 3 months, the inflation of that specific commodity has actually gone all the way up there, okay? And that's why you find like a plate of chips or fries, on however you guys you call them, you might realize it was trading at 60 shillings, you know, in a kind of an average location. I'm not talking about the 5 stars. And then within some few months, then you realize the same plate is trading for 100 Kenyan shillings or 200 or something of sort. So what does it mean? That is a commodity that Kenya has not actually gotten the capacity to, you know, have the proper storage and what have you. And the same case applies to tomatoes. Sometimes you might realize that people are selling a whole sack of tomatoes for a very cheap amount of money, and sometimes you might realize the same goes for like an outrageous amount of money. Right, like right now as we speak in Kenya, I'm making this video on November 19th. So therefore it means that, wow, that's what goes. Okay, now you have to understand different commodities usually does what attract different in terms of the inflation. So if you can invest and actually diversify on areas where you can put your money, then rest assured you are cautioned from the inflation of such. Okay, the last one but not the least is regular review and adjustments. So the only way you can accommodate this fee is actually going ahead and adjusting your areas, and of course you can only adjust after you've reviewed your numbers. Go sit down, check what you pay for your rent, for your food, for your accommodation of entertainment, black tax, and all those kind of areas, even the debt that you're taking or the loans that you're taking. And then you realize, you know, by the way, do you know, guys, that some of the debts that people are taking nowadays, they're going even above 21%, especially if you're buying some commodities, some sort of let's say cars or something of sort. Okay, and these companies actually have that you know, sort of a character of charging way extreme amount of debt or in terms of interest when you're getting those things. Okay, now the point is, it's always good to make sure that at least you apply these 4 things that I've shared with you, so that at least you can be able to beat inflation like a pro. That's not the end of this video, because I always post videos containing or pertaining money, investment, and anything related to exactly that. So the only thing that you can do so that you don't miss it with my gig, consider subscribing and also like this video. Pick my number from the description of this specific video. Let's talk business and move to the next level. For now, it's a